You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glen Sarvati.
Welcome to another edition of the Big Cast. My name is Glen Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we will be continuing our coverage from the VentureTech conference, which took place a couple weeks ago now, down in Frisco, Texas. And we've got interviews with the three companies that wound up on the finalist stage for their overall main stage event of the pitch competition. We'll be speaking to the founders of Reset, Goodbuy, and ScribeUp. That'll be coming up in just a second. First, let me just remind you, you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And if you happen to be listening to this soon after the podcast drops, you still have a chance to sign up and join us for our CU Town Hall session, which takes place on Wednesday, November 19th, 3 p.m. Eastern, noon Pacific. It's our roughly every month or so get-together with credit union leaders and folks in the fintech world talking about the most important and urgent issues that face leaders in those organizations these days. Come with your thinking caps, come looking to contribute. It is free to attend, but you do need to register in advance. cutownhall.com is where you can do that. And if you happen to be listening to this after November 19th, soon after that, you should be able to find a replay of this session as well as past sessions posted on that same website. One piece of, and we got so much content this week with these interviews that I'm just going to do a fairly quick recap of the week's news. But the one that just caught my eye this morning that I think is important enough to mention is an article from CNBC that is a follow-up on the continuing saga of open banking. As you may recall, the open banking regulation that had been published about a year ago, right about a year ago, under the Biden administration, then rescinded and follow up with court cases. A lot of waffling back and forth on it. Currently under reevaluation. Supposedly the rule is being rewritten by the current version of the CFPB, whoever happens to still be in that building. But at the same time, there's all kinds of other things going on in the background. We had already talked about the fact that Plaid and JP Morgan Chase had struck an agreement for Plaid to pay for access to data through JP Morgan Chase that they need for all of their services, which was a big change of policy because historically there had not been money changing hands on that. And one of the issues with the open banking Section 1033 rule is that it was not permissible to actually charge for access to that data, which is a real stick in the craw for the financial institution, quote unquote, data providers, which face costs to actually set up portals and whatnot and ways to securely provide that data. So Plaid seemed to be kind of the first chink in the armor that showed, okay, at least with the biggest bank in the country that's working with this stuff, Chase, they said, okay, yeah, fine, we'll pay. Well, now CNBC is reporting that Chase has struck agreements with multiple other fintech companies also receiving payment for access to this. And I think the quote said it will add up to hundreds of millions of dollars, which I thought was pretty interesting. The CNBC article's title was JP Morgan Chase wins fight with fintech firms over fees. Now, I'm not going to put words into JP Morgan's mouth. That's the way that it was characterized by CNBC. But I would be careful about premature celebration because we still have a potential rule making taking place in the regulatory sphere, and we're going to see how that plays out. But supposedly, these new agreements that have already been struck by JP Morgan with these fintechs, according to JP Morgan, represent 95% of the data pulls that are made on their system, which is pretty remarkable because they only mentioned 4 companies in the process of doing this. Plaid, Yodlee, Morningstar, which is not somebody we usually think of in this space, but obviously they've got a lot going on, and Akoya, which again, big player, but I wouldn't have necessarily thought, anyway, they've agreed to be one of the ones that actually pay. This feels to me like the 80-20 rule on steroids, because if you're up to 95% of the pulls, there's a whole lot more fintech firms out there looking for access to this data, which then begs the question, what happens to them? Are they going to literally do agreements with all 4,000 of these firms? Are they going to put out take it or leave it offers, the way that Apple did with Apple Pay originally? Are they going to cut off access if people don't agree to their terms? So I'm not sure that, it's a great free market solution, but it's not done yet. And I'm kind of curious where it's going to go. And also, again, this is just one bank. I think we can assume it kind of serves as a de facto standard. But what does the pricing look like for the other folks? The Financial Technology Association remains adamantly opposed to this as well. The quote, which is also in the CNBC article, is that prohibitive tolls are anti-competitive in the data sharing space. So we ain't done yet as far as I'm concerned, but it is interesting. Of course, there's a whole bunch of other banks. This is only JP Morgan Chase that has done this. I think we can assume it kind of sets a de facto standard in the industry. But as always, a lot more to come. Let's jump into the details of, as I said before, and I'll post a link. Last week, we already had 3 great interviews with some other companies, including the launch party winner, Ares Fraud Solution at VentureTech. But the way the main stage event for the more seasoned companies, it's still young startups, but a little bit further along than the launch party participants, they broke into 4 brackets. There was a separate vote among each of those, and then the winners of each of those brackets continued on to the main stage. We have interviews with all 3 of those finalists. Let's start off with the company that actually wound up taking home the hardware, the check, whatever you want to call it. They were the ultimate winner of the audience vote of the bake-off of the 3 finalists. Founder Matt Dicou from Reset. I'm here with Matt Dicou, the co-founder and CEO of Reset and the winner of the VentureTech pitch competition from just a couple of weeks ago down in Frisco, Texas. Congratulations, Matt, and thanks for taking the time to talk.
Thanks, Glenn. Really excited to be on with you.
So your product Reset is an earned wage access product, and you talked about on stage that the success of Chime pretty much demonstrates the demand for this product in the marketplace. There are other offerings. How do you differentiate how Reset goes about this solution compared to the other alternatives?
Yeah, so Reset is purpose-built for financial institutions. So there are other, offerings in the market that focus on employers, or they focus on, they're just like fintechs that are like direct-to-consumer cash advance apps. The way that we're different is we work with community financial institutions to provide their own earned wage access solution. So let's say you're a member of a particular credit union. As a benefit of being a member of that credit union, you can access your pay as you earn it versus every 2 weeks, and do so entirely fee-free. So the first piece is, we're financial institution centric. We're helping financial institutions to white label. The second thing is we're entirely fee-free. The third way that we are different, and it really fits with the ethos of the credit union movement, we want this to be a responsible financial product. And so we do a lot of heavy lifting to make sure that's the case, specifically around, we call it automated cash flow budgeting. So we actually are analyzing the money that is coming into an account, so the earned but unpaid wages. We're looking at how much is in the share checking account, so the money they have now, and then we also are looking at recurring expenses and recurring outflows. And so by doing that, we're able to dynamically adjust the spending limit, the access amount on the card, so that we can ensure that the member will use it in a responsible way, and also be able to meet like their savings goals and the other financial goals that they have as well.
Yeah, I remember that point around I guess intelligent routing is not the right word, I guess, but intelligent bill payment, and that definitely is something I want to follow up on. The other piece, as I understand it, your solution is somewhat card centric. Is that correct? Am I thinking about it the right way?
That's right. Yeah. So that's one of the ways that we're able to, I said fee free, but there still is a sustainable value prop here where we are leveraging cards. And so we are actually helping credit unions to earn premium credit interchange on everyday transactions. And so there's kind of two components to that. Number one, for credit unions below 10 billion in assets, that's up to 80% more interchange on the same transaction. For those that are above 10 billion, that's nearly 4x what they are making on the debit on comparable debit interchange. So that's the first piece in terms of how it's sustainable. The other piece is it's a much better experience for a member. Many solutions on the marketplace, they require you to go in, you have to select how much you'd like to transfer, you have to accept disclosures, you have to pay a fee, the money gets transferred, and then you can use it on your debit card. With us, we've made it as simple as swiping a card. And so that's why we see very naturally, without any incentives or any other types of rewards, that this card ends up becoming members' primary card. Again, just raw consumer behavior. They choose to pay this way because of how we have made it easy for them to use.
And given that you are going through the financial institutions, I know this is one of the first questions they always ask. The balances remain at the credit union, correct? It doesn't get transferred into a separate account?
That's right. That's exactly right. So it's everything is built, integrated into the credit union, their checking account, their card offering, their mobile banking app. And so it's their product that we're helping them white label.
And the way you just described kind of the top of wallet primary card account, kind of relationship, at some point it stops really making a difference whether it's being paid out of earned wage access that you've already gotten through your payroll provider versus the piece that you've received early, which I won't say you haven't earned it because that's the whole idea, you have. But at that point, the two basically become seamless.
Exactly. And so we've set up our product in a way that you can almost think of it as you are paying out of different pockets, right? So there's the share checking account and the money you have there, or there's this other balance that we're helping you construct, which is the earnings balance that effectively the member can also use to pay from. And a lot of the intelligence that we bring to the transaction and the transaction routing helps the member understand whether they should pay from their share checking right now, or if they should pay from their earnings balance, and like what makes the most sense for that particular transaction at that point in time.
Got it. If I'm not mistaken, I think I actually asked this question during the Q&A after your pitch. I was wondering how that works in terms of how you're integrated with the different core systems at credit unions. But as we've spoken more, it's really the card processor that becomes the more relevant play in terms of how you work into the system.
Yeah, so we have a couple of different deployment methods, and basically the key takeaway is we have something for every credit union. So we have like a zero integration approach where we can bring our card processor to the mix. We use this for proofs of concepts. Sometimes for smaller credit unions, it also makes sense as well. And then for other situations, depending on who your card processor is, we might be able to do more automation of the transaction routing. But like I said, across our I'd call it three different deployment methods, there's something for every credit union.
And you just mentioned proof of concept. I know you've gone through a couple with some pretty high profile credit unions. Not sure which ones you're able to disclose now, but I believe you've got a few more lined up between now and the end of the year, right?
That's right. Yeah. So we've done one proof of concept to date, and then we've got another one that is kicking off this week, and then we have another one that will commence before the end of this year, and then we're also part of Filing's FiLab.
Yeah, I want to talk to you about that because that's a pretty big deal that you got coming up over the course of the next 6-7 months or so.
That's right. Yeah. So we'll be kicking off with probably another 5 to 6 credit unions in January of next year, and doing proofs of concept with them. And then there's kind of a structured testing process. We'll write a case study as well. But the whole intention with the proof of concept, of course, is to help credit unions get learnings with their members in their market, and then help them make the business case for the more embedded, more integrated version of the product, which is I often talk about it as the proof of concept is like to nail it, and then the embedded version is to scale it.
Yep. And the FiLab, I guess, gives you a chance to do that kind of proof of concept at scale, right? Because you're doing it with multiple credit unions at once.
Exactly. Yeah. Highly engaged, very innovative set of credit unions that want to test with fintechs. And so they help to match make and put us in touch with credit unions who are interested. And there's sort of like a voting process that got us to this point of being selected. So credit unions are basically saying, here are the set of problems that we're solving for. Here are the set of fintechs that we have, and then they vote on which ones to put forward. And so really excited about it.
Well, sounds like there's plenty coming up over the course of the next couple of months, but if people want to find out more before then, best way is the website?
Yeah, they can go to the website. There, we have a little tab at the top that says financial institutions, or also they can always send an email to partner@getreset.co. So we're .co, not .com. So they can always send an email inquiry there, and we'd be happy to follow up with them.
And the website as well, getreset.co. Right?
That's right.
Matt Dicou, co-founder and CEO of Reset. Congratulations again on the VentureTech main stage win, and keep following along. Talk to you soon.
Thanks, Glenn.
On with another company that we have spoken with before, and actually more recently than I realized. The defending winner of the Nicuso Next Big Idea competition winner, co-founder Cary Fortin from Goodbuy. Back here at VentureTech with Cary Fortin. It feels like it was a lot longer ago than April.
I know.
We last spoke, Cary Fortin, co-founder of Goodbuy.
Yes.
You were the winners of the Nicuso Next Big Idea competition.
Yes.
And it's been quite a whirlwind 6 months.
It really, that is wild that's all it's been. Yeah, I think that we are forever indebted to Nicuso and the platform they gave us, because I think that was our real sort of introduction to credit unions in a meaningful way. And certainly that is the thing that I think gave us a little stamp of approval that made the first few folks willing to take a risk with us.
Well, I'd forgotten that you literally were not in market with any partners. Again, Goodbuy, small business solution, marketplace solution. Yes. You just reminded me you actually were live with a direct-to-consumer model back in 2021, but that was the first time you put the vision out. Again, you've got, I forget how many credit unions it is, but you've got some good solid names and you've got some good solid traction.
Oh, yeah, we're really fortunate. So we started with WSECU, Scott Dacus out of there, and One Washington Financial has really been an incredible champion for us. And from there, we have launched with Altura Credit Union. Kevin Sherrill is just an amazing human. And
what state is that?
They're in California. Okay. So they're sort of Inland Empire-ish, close to LA. And then MSU FCU, which has been really thrilling.
Which is an interesting one because they've decided to brand it in a white label fashion.
Yes.
And what is it again? Hello Local?
Hello Local, yeah. So all of our solutions are white labeled, but for them, they really had clear branding. And a part of it is that they had a solution previously at MSU FCU where they had really worked to support their small businesses. And that had to go away because of the amount of lift and the amount of labor that was associated. And so they were thrilled when we were, wanting to sort of relaunch this, give it new life, new legs through Goodbuy.
So let's step back with the value proposition. Again, you mentioned, small business, SMBs, not necessarily a core. I mean, I think you said, 96% bank with other than credit unions.
Yes.
And this is an opportunity. I mean, it's a natural fit, shop local, things along those lines.
That is exactly it. And what we see is that there are all of these banks. I guess taking a step back, we have spoken with so many small business owners, and they are banking.
This goes back to when you were doing it on a direct basis.
Yes, for 2021, we had 1,500 small businesses onboarded, and they are banking with Chase because Chase gave them $300 to start their checking account. That's why, not because they love and adore them, and certainly not because they're given a lot of attention. And so, there are these places like Alaska Airlines where they can offer you discounts at Sony, or you have miles. That's not where credit unions are going to win. They're going to win by owning the thing that they do better than anyone else, which is being deeply embedded inside of communities. It's supporting their members. And, we mentioned, and you mentioned this thoughtfully, only 4% of small businesses currently bank with credit unions, which is just this massive untapped opportunity because, again, what we're seeing from small businesses, they are dying to find a place where they can make their money matter in terms of advertising. They're throwing out money against Amazon and all these giants and not getting what they want. Credit unions have members, sometimes hundreds of thousands, who are in their natural geography, and we're just providing a way to connect those two. And credit unions are building that relationship with themselves at the center. It's really beautiful.
And you can actually, by signing up for the marketplace, make specific offers to the credit union members, to the exposed community.
Thank you. Yes, that is exactly it. So the small businesses who choose to sign up get to tell us a bit about themselves and their business, and then offer some sort of discount or incentive that suits them. So we see a lot of restaurants offering happy hour specials, or people offering discounts at bookstores, or a little freebie. And really what that does is it is so appealing to the member who maybe wants to try something new, maybe hears about this business for the first time. And 70% of transactions are happening inside of local communities. So if we give someone a little draw to come somewhere new, it could be a start of a really amazing connection.
Now, I thought it was interesting that, again, you've got the 4% of credit union SMBs who are already members of credit unions. So you can deepen the relationship with them.
Absolutely.
Now, I guess there's a couple, I think I saw on your enrollment page, and I'm sure it varies by every credit union how they decide to roll it out.
Yes.
There's the question, are you currently a member? Now, maybe it's a requirement to be of the storefront. You can also maybe do a freemium model where you can be a member of the community, but then get added exposure.
It's such a great point. Yeah. So this marketplace becomes this incredible advertising tool where you say like, hey, here's this thing. This is what we're offering. And to non-members, they see it, they go through, they sign up, they get to the end and say like, oh shoot, I'm not a member. A credit union can decide like, okay, well that's our sort of paywall break. You've got to join in order to be shown up, or say, get a sample of what this would feel like to be a member.
It's my lead generator.
Yeah, get a feeling of that.
It could even be like, okay, you can get in this far, but if you want that added, tell us more about yourself and we'll feature you.
Absolutely, yes. And then, a big thing too is we are then turning around and providing highly vetted small business leads to, anyone's account team as well. We then have, all the information on their business and who the owner is and what they value and where it is they're looking for support. And so we're really sort of giving this playbook, because we also give marketing materials. So small business teams or other folks can reach out and really facilitate those relationships.
You just threw out another one that I had not ever heard before, just in this last little kind of pitch-off about PPP loans with 5-year terms. Those are all coming due.
Isn't that wild? So I've had that one in my back pocket for a little bit. So in 2021, the government issued $800 billion in PPP loans that had 5-year maturity, which means in 2026, there are 11.9 million different loans that are then going to be sort of up for grabs.
May or may not be 11.9 million small businesses, but probably someplace around that number.
A really solid, what we're seeing is that it's, north of 70%. And so what's that's looking like, again, 40% of them are looking for a new place to bank, a new place to get a line of credit, or a place to put their deposits, right? These are free agents who are all of a sudden rushing into this ecosystem, and credit unions just have this opportunity. Because the truth is, showing my bias here, I believe credit unions are the best fit for small business. And so now they just have this added layer benefit to say, we really understand you. We're offering you something that no bank ever could. And we're giving you access to this community and to this member base because we want to support you, because we believe in you. Because when we all grow, that's best for our entire community.
Makes sense.
Yeah.
People want to find out more. I mean, obviously, you're on a roll.
Yeah.
And you actually won another, the Receiver Group, also, which is also connected to MSUFC. You were at their conference.
Yes.
That was, again, an audience vote, correct?
Yes, that was. And so, if people want to learn more, please, we are at trygoodbuy.com, so TRYGOODBUY.com. We're on LinkedIn. Myself, I'm Cary Fortin. My co-founder is Kara Oppenheimer. And we would love to hear from more credit unions.
Cary Fortin, co-founder of Goodbuy. Always great to talk to you.
Thank you so much, Glenn.
And last but not least, another company that I definitely made my radar very firmly in terms of one of the interesting solutions that I saw. A company called ScribeUp and their co-founder, Jordan Mackler. I'm here with Jordan Mackler, the CEO and co-founder of ScribeUp, who was one of the finalists today in the main event of the pitch-off at VentureTech, and one that definitely stood out to me as well. So thanks for taking the time.
Yeah, my pleasure.
Subscription management service. I mean, we see that a lot these days. I know you pointed out that Cornerstone Advisors says that's one of the most popular demanded consumer features that they'd like to see in digital banking, but typically is not offered through the banks.
That's exactly right. As you maybe had heard in the presentation, the main way consumers get any sort of visibility, tracking, or control over their bills today is working with a personal finance tool known as Rocket Money. Yep. Been a huge platform. You've probably seen their advertising everywhere. And it's really because they've capitalized on the gap of banking offering that these financial institutions have not serviced their ultimate end consumers and members on the basis of visibility over these bills. And so I have to go to this third-party tool, pay them a subscription to manage my subscriptions. The irony of that.
That's right. Good point. I hadn't thought about that.
And the reality is, and what we built this thesis of this business on, is that ultimately the consumer trust in the payment forms that they're using for these types of bills, and ultimately their trusted financial partners should be meeting their consumers around this huge financial pain point around unwanted bills and the lack of transparency around recurring bills. So we offer this solution to the financial institution directly, and then what happens is consumers just have more confidence in putting those payment forms on file when it builds in the capability of detecting these bills, tracking these bills, and giving you easy access in or out of the bills.
And it sounds like you're able to track some pretty far-flung, subscriptions.
We've seen everything from some things that I can't publicly say to your local yoga studio, whatever it may be. From a detection standpoint, we've seen it all. And
it's a query based on recurring transactions?
Yeah, so the way it works is we get access to essentially the raw transaction feed of what's happening in the financial institution, where consumers are externally spending their money, whether it's on their checking account, whether it's out of cards. We plug that into and use kind of artificial intelligence to understand who the billers are there, and use inference around the timing of those bills and the biller themselves, as well as our knowledge of plans and the merchant information to come up with what a consumer wants to know of. These are the bills I have, and this is when that bill is going to be next due.
And one-time cancellation is a one-click cancellation.
Yeah,
an option as well.
One-click cancellation, one-click updating the payment form on file, coming out with some more advanced functionality around pausing, changing plans, really kind of advanced connectivity. The goal here is to give your credit union the ability to meet you at your management of these bills, just as they do for other kind of forms of financial expenses.
You had some pretty interesting statistics. I think was it $600 annually, $600?
$600 in annual financial waste. And then when we go live in our clients, this is our own data, about 60% of these users immediately find a bill they didn't realize they were paying for. So I've suffered from the problem. I'm not sure if you have, but it's a pretty prevalent problem.
It's the inertia one too. I'm not sure that I'm not aware of them. I just never get around to turning them off.
Exactly. Yeah. So it's a pain to figure out what I'm paying for, and it's a pain to get out of the bills even when I figure it out. There's actually a lot of sociology studies about kind of just like this emotional scarring of being burnt with these bills in the past, plus this like emotional anxiety over even knowing. I know it's a problem. Fortunately, if you're in a financial position to absorb that, you may not even want to like reckon with the problem itself.
Yeah, exactly.
But many people don't have that kind of luxury, and that kind of financial waste that's coming out of their accounts is really plaguing kind of a lot of different socioeconomic demographics.
Now, if someone's paying it through a credit card, which is not a credit card issued by the institution you're working with, you're able to still track those. How do you get that?
So if it's issued, certain credit unions have like third-party credit card issuers, of which we could add to their primary data source. So that would be directly in the integration. But most often, consumers have bills parked on 2 to 4 different financial relationships. So even if we plug in with the credit union themselves and have all of their accounts set up properly, most of these members have bills that exist on complementary card or credit products or debit products or complementary or competitive financial accounts that they have. We have a partnership with Plaid. We also work with kind of Finicity and other kind of open banking sources to be able to allow the member to connect those external sources, of which it's called a bill finder product, where you connect the account and we tell you the bills you may or may not know exist on those complementary card and accounts.
I thought it was interesting. The origin stories of these companies always are really interesting. You mentioned fantasy sports, and one of your classmates in graduate school.
That's right. My former classmate, then turned into friend, then turned into a business partner. My co-founder Yohei is actually originally from Japan. He's from Tokyo originally. Huge baseball fan. Came to the States. I tried getting him interested in fantasy football, which is a big
Football,
hobby of
not
mine.
baseball. You're shifting sports.
I was shifting sports. It was fall when graduate school started,
right,
so that was like the first kind of social event that was at graduate school. He didn't know much about it, but as I mentioned, he's a super competitive guy still to this day. So he just tried to get YouTube TV and Fantasy Pros and ESPN Plus.
You're also, you're going to MIT, so he's obviously going to study up.
Exactly. Yeah, he's not screwing around. So if he's gonna do it, he's gonna do it right. Unfortunately, this was before school started, and school starts. You get classes, you get life picks up, and he forgot about these bills. And the irony of putting his Chase account on file for these services, and then for an innocent hobby of mine, he got hit with $350 from Chase for these various bills, and he swore off American football. He was like, I'll never do it, which to me...
The NFL should have paid it off. FanDuel.
That's a different conversation. Yeah. There's a whole different kind of unbundling of the football world today. But the irony is, it's something I'm super passionate about. It brings a lot of happiness to my life. But the fact that he wouldn't interact with this hobby on the basis of financial friction just didn't seem to resonate with me. All these powerful tools offering health, happiness, productivity, AI tools, yoga, meditation. Most people are not adopting these services on the basis of fear of getting caught with these bills. So meeting our financial partners and giving them the capabilities to the consumers to adopt these services, what you see is that people just adopt services on the merits of how they add value to their lives, not on some looming anxiety around getting caught with a bill.
Now, you also gave, on a somewhat more serious note, the example of servicemen, particularly in Germany, who you discovered, I don't know how this came up, the idea that they're still paying German cell phone bills like well after they've come back to the States.
Yeah, and that's the irony of what we see is that these service members were deployed overseas. They were stationed in Germany. We work with a credit union that services those service members, and when immediately they saw all the bills that are coming out of their accounts on a recurring basis, vast majority of them realized that they thought they got out of these telecom bills, but they were still being pulled every month after being stationed back in the United States and coming back home after serving our country. And just the irony of, all of these kind of anecdotes and kind of emotional stories are really just on the irony of this friction that exists and being able to serve our clients, meeting their consumers around this financial play point, many of which they know about. In this case, many of them did not know about that until then.
I'm just thinking about the irony also of usually when I think about friction, it prevents you from buying something.
Right.
This prevents you from unbuying something. It's the other side of it.
Right.
Yeah. You mentioned already Rocket Money, which was the thing that came to my mind when I was listening. And obviously they've got a lot of marketing dollars. How do you compare and contrast? Obviously the idea is you're offering it through the financial institution. Any other compare and contrast in terms of your services?
Yeah, that's exactly right. Like as you use our clients' payment forms, you automatically get all the functionality that exists with Rocket Money. So clear position differentiation. I compare it mostly to what you've probably seen in the credit score space. So way long time ago, credit score, you only were people didn't know their credit score.
Right.
And they got a loan and they got, this is my credit score when it's too late. Then personal finance tools came to market, freecreditscore.com, all these tools that are now obsolete to say, hey, you could track your credit scores for a consumer. And then eventually smart companies like Savvy Money and these other tools brought that as an embedded feature within your financial relationship. So, and I would argue we're that part of that evolution where it's now people know that recurring bills are a problem and that, right now the only main source to get is from Rocket Money, but they would prefer to get from the sources that they're using as the payment forms. And so that's really where we see as a disruptive effect for where consumers want to have this tooling. It makes a lot of sense for a financial institution to offer it. And it's just a better, more efficient way to have this value proposition service.
Now, did you start consumer direct and move into the distribution channel with financial institutions?
Yeah, we did.
So many companies realized this might be the best way to go to market.
Exactly. We thought that, hey, payment forms are not smart enough to handle these recurring bills. We'll build out our own payment form. I think there's a lot of learnings along that journey. We saw hundreds of thousands of users that signed up for our tools to use all this functionality. So the user behavior of it was clear. What we found is that most people preferred to have this behind their everyday card rather than having a separate card for your bills. A bit of an obvious kind of reconciliation, revitalization. And one of our first clients actually found our solution and knew that their consumers had this type of problem. And so we started to do this more embedded approach. And
one of your consumers was working at a credit union and brought it? Or?
Yeah, I think they saw a news there was some publicity around our product. And at the time, what became obvious is that we were going to conform into a broader neobank, right? We had to offer lending products and all these features to drive value with consumers, but that's not really what we wanted to do. We really just wanted to focus on subscription management and these recurring bills. One of the CEOs of a credit union saw that this existed, and they said, hey, we need to offer this. It's actually Service Credit Union, and
which is now your CUSO.
Exactly. And that was kind of the origins of some of the embedded product, and we've kind of scaled this out to over 30 clients. We work with leading both neobanks and consumer fintechs today, NerdWallet, DailyPay, some of our larger consumer fintech clients, as well as a number of credit unions and banks throughout the country.
Resonated with that CEO and clearly resonated with the audience today because you wound up on the finalist stage with the turnout that you got from the voting side. If people want to find out more, what's the best way to do so?
Yeah, our website is www.scribeup.io. Feel free to reach out to me directly, Jordan Mackler on LinkedIn. We're really passionate about the space, so even if you're interested in just sharing notes about what we've learned and or you're a prospective client, of course. Happy to teach you more about kind of what we've learned along the way.
And we'll put that in the show notes as well. Jordan Mackler, co-founder and CEO of ScribeUp. Thanks so much.
Thank you.
So there you have it. Congratulations again to Matt Dicou and Reset for winning the grand prize this year at VentureTech. Already looking forward to next year's event. I've been really impressed by how they continue to find all kinds of great new companies. And as I've said before, this late in the year after Finovate and all the other places where you can see these young fintechs, to have 24 companies on stage, 12 characterized as launch party, the other 12 a little bit further along. But still, out of those, I think, I haven't done the exact count, 15, 16 of them I had never seen on stage or had been familiar with before. So that's pretty impressive and a great way to spend some time and learn more about what's out there on offer from the fintech community and continuing to be new solutions out there on offer. Speaking of ways to kind of get involved in the space, I just received this morning one of my favorite documents that comes out every year. William Mills Associates puts together a really handy resource, their financial services, financial technology trade show directory, listing both chronologically and also broken out by crypto, credit union, bank, etc. The different events that take place. And, as we all know, there's an awful lot of them. It's kind of nice to see them all in one place. It can be very helpful in terms of planning schedules. And a lot of times I find it useful to make sure that if I've got something else I'm trying to put together, to make sure that it's not going to run into conflicts with a big event out there in the industry that might be drawing some of the people who I'd also like to try to gather and have at whatever other event I'd like to try to pull together. So that is out there. We'll post a link, William Mills Associates. They make this freely available. It's a wonderful service to the community. So you can track down a copy there. I always find it to be good reading, or at least a good resource. Wouldn't call it reading. It's more of a catalog. I guess it's worth browsing. It's not a heavy read. Anyway, next week we're back with new content and our annual Thanksgiving episode and the things that we're grateful for in the fintech world, the credit union world, and beyond. So hope you will join us for that. My name is Glen Sarvati. You can always find out more about my firm, 154 Advisors, by checking me out on LinkedIn. And you can find out more about the Best Innovation Group and me. You can find that more information there as well by checking out big-fintech.com and all the great services the Best Innovation Group has to offer. If you go out to the media tab, you will find past episodes of the Bigcast, lots of great interviews with lots of very interesting companies if you just scroll back a little bit. And if you're not at the website, depending on where you usually find these things, we're available on Spotify, also with past catalogs, Apple Music, Amazon, etc. You should be able to find the show notes where you can track down more things about what we were just speaking about if you want more detail, including that CNBC article about JP Morgan Chase and the fintech fees that they're charging for data access, and the William Mills directory as well. Like us, subscribe, whatever it is you do, and you'll always find out when we have new content, which is pretty much every Tuesday afternoon. Hope to see you again next week, and as always, thanks for listening.
Check back each week for the latest from the Bigcast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at BigFintech. Email info@big-fintech.com. or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.